Hello and welcome to Startup Street. I'm Arundhati Ramanan, and with me, as always, is Shruti Mishra. And these are the top headlines from the startup world. Another tech giant prunes its workforce. Facebook's parent company Meta fires more than 11,000 employees. I've decided to reduce the size of our team by about 13% and let more than 11,000 of our talented employees go, Meta's chief executive Mark Zuckerberg said in a blog post today.
Elon Musk discloses yet another share sale in Tesla worth $4 billion. Musk has sold Tesla shares worth $20 billion since April, when he first made an investment in Twitter.
Cryptocurrencies see a rapid sell-off. Bitcoin briefly drops to its lowest level in 2022. Investor sentiment takes a beating after the world's largest crypto exchange, Binance, steps in to bail out the second largest exchange, FTX, due to a liquidity crunch.
InsurTech startup Plum lays off 36 employees, around 10% of its total workforce of 350. Co-founders Abhishek Poddar and Saurabh Arora, in a statement to CNBC-TV18, attribute the layoffs to the tough market conditions. The company will extend severance pay, healthcare benefits, ESOP vesting placement, and career support to the affected staff.
Keka, an HR tech platform for small and medium-sized enterprises, bags $57 million in a Series A round led by Westbridge Capital.
Well, those are the headlines we're tracking for you this evening. The layoffs across tech industry continues. Facebook's parent company Meta has announced the biggest tech layoff so far this year. The company has sacked 11,000 employees, which accounts to about 13% of its workforce. Shilpa Ranipeta is here with all the details. Shilpa, what are you picking up?
Well, this is the first time since Mark Zuckerberg founded Meta, which was then Facebook, that he has had to lay off employees in what is currently the largest layoffs this year. Now, nearly 13% of Meta is being let go, and that amounts to more than 11,000 employees across Meta's family of apps that includes Facebook, Messenger, WhatsApp, and Instagram. And in a message to employees, Zuckerberg said that he thought that the move to online and the e-commerce surge that we saw during the pandemic will continue the post-pandemic as well. And then he significantly increased investments in that direction. But that did not play out as expected, thanks to online commerce returning to prior trends and the microeconomic downturn and increased competition. Zuckerberg says that the company now needs to become more capital efficient. Now, laid-off employees will lose access to most Meta systems today, but will have access to mail. Employees in the US will get severance pay along with a few other services, including immigration support for those who are on the visa. And similar support will also be there for those outside the US as well. Now, Meta will also cut discretionary spending and extend the freezing higher through the next coming quarter as well. Now, Zuckerberg is shifting focus to priority growth areas like the AI discovery engine, ads, business platforms, and the long-term vision that the company has for the metaverse. Now, cost-cutting measures also include scaling back of budgets, reducing perks, and shrinking Meta's real estate footprint. Back to you.
All right, Shilpa, many thanks for those details. So, mega layoffs there at Meta. Now, the government will release a reworked draft of the data protection bill for feedback by the end of this month or early next month. Remember, the government had withdrawn it from the parliament in August. Now, the draft bill is likely to keep social media companies outside the regulatory ambit after concerns over overlapping regulations under the data protection law. The bill may also relax data localization, storage, and data processing norms. And government sources say that the bill will not seek to regulate devices. It will exclude a provision for testing and certification of hardware, and it will also ease compliance burden for startups.
Thank you, Arundhati, for those details. And moving on, cryptocurrencies saw a rapid sell-off today. This after the world's largest crypto exchange, Binance, stepped in to bail out the second largest exchange, FTX, due to a liquidity crunch. Manisha Gupta is here with the details. Manisha, what are you picking up?
Oh, well, yes, a lot of drama and much of that clearly happening on Twitter yet again. But, you know, it's a third straight day of selling that we've seen in case of cryptocurrencies. And this clearly is a contagion effect. If you look at the Bitcoin, it's trading at the lowest since November 2020. It's sad, really, because the last couple of months was some consolidation. The month of October actually saw some gains coming in for many of these cryptocurrencies. November clearly seems to be clearing all that off. So much so that we saw the Bitcoin decline to 17,200 on the lower side as well. The sell-off also has been seen in case of altcoins, Bitcoins, Ethereum, and some of those stable coins as well. Well, the backstory really is about Binance, which is the largest cryptocurrency exchange by volume, buying its rival FTX in an attempt to really hold the cryptocurrency there, or as a bailout attempt, if you can see. We have seen a kind of sell-off that we've seen in FTX's native currency, which is FTT, and this is after CZ, or as Zhao is called, the owner of Binance, saying that it is going to sell off the illiquid tokens that are on the balance sheet of FTX, and also its company Alameda Research. So within these tokens, you have Solana, which has seen a sell-off as well, and FTT has declined almost nearly about 70% in last 3 or 4 trading sessions itself. When you look at the holders of this cryptocurrencies, the customers also have been struggling actually to get the money out of FTX. We have seen a sell-off or a liquidation of nearly $6 billion within FTX in the last 3 trading sessions itself. There is money, of course, coming in for Binance. If you look at the inflow, that has been at 110 million of the stable coins. The current balance clearly stands at around $26.7 billion there. The sell-off, the market tells us, is not perhaps done even as of now. The next 3 or 4 sessions could see some more selling coming in for many of these cryptocurrencies. So whether it's about Bitcoin, Ethereum, Solana, FTT, there's a huge sell-off happening in the European markets even as we speak.
Thank you, Manisha, for all those details on Binance's FTX acquisition. Moving on, emerging markets venture capital firm Kuona Capital today announced the final close of its Fund 3 at $332 million, significantly exceeding its $250 million target. Now, this is the 3rd fund from Kuona Capital since its inception, bringing the firm's aggregate committed capital to over $745 million. And to talk to us about Kuona's road ahead, joining me now is its co-founder and managing partner, Ganesh Rangaswamy. Ganesh, welcome to Startup Street. This is the 3rd fund from Kuona Capital. How do you plan to accelerate financial inclusion investments with the $332 million raised? If you could elaborate on how many investments you plan to make, the ticket size, and how soon?
Sure. Thank you. Thank you very much for having me on the show, Shruti. It's delighted to be here. And we are super excited to have raised this fund, especially in these challenging times. From a Kuona perspective, our strategy is going to continue to probably be more or less similar to what we had in the previous funds. We will probably roughly invest in about 25 plus portfolio companies. We invest across 4 continents, and India is one of our most active geographies, if not the most. And as you know, we are emerging markets. We are specialized emerging markets fund. And one of the evolutions from a strategy perspective is going to be fintech and fintech adjacencies investment. And when I say adjacencies, essentially, we're looking at a lot of crossover and hybrid opportunities, which contextually fall at the convergence of financial innovation and sectoral innovation, whether in ag tech, food tech, health tech, mobility, supply chain, SME digitization, climate tech, so on and so forth. The foundation of Kuona is that we look at fintech as our financial innovation as the oil that greases the economic engine across sectors, and hence it gives us the platform and opportunity to invest quite broadly to make an impact from financial inclusion perspective.
So 25 plus companies, Ganesh, but what is the ticket size going to be, and how soon do you plan to start investing?
We are already investing out of this fund, Shruti. This is a fund. This is the final close of the fund. We've been investing out of this fund for about a year. And the ticket size, is more diverse in case of this fund, or rather more divergent. We can invest as low as $500,000 to $1 million, and as high as about $10 million to start with. But average check sizes would be about 5 to 6 million. And over life of a company, we'd probably invest about 2 to 3 times of that in the portfolio companies.
All right, Ganesh, like you said, Kuona focuses its investments on innovative technology companies that are expanding access to financial services for the underserved consumers and businesses. What is the kind of impact Kuona has created through its portfolio companies? If you could give us a sense of what kind of role Kuona wants to play in the impact investing industry.
Sure, I'm happy to do that. We do come up with a very detailed and extensive impact report on an annual basis, and on quarterly basis, we work closely with our portfolio companies to actualize and measure these the frameworks through which we understand impact. And we are proud to say that Kuona probably has, from a capital raise perspective, we have helped our portfolio companies raise about 10 times the amount of capital that we have invested in these companies in equity form over the years since we have been active. From a consumer and SME impact perspective, Kona has probably reached or been able to reach through our portfolio companies and the work they do over 50 million SMEs and consumers. And from a throughput and value perspective, probably a transaction of over $100 billion, whether in terms of across various verticals, whether it's payments, whether it's credit, both consumer and SME, whether it's in insurance, whether it's in cross-border trade, so on and so forth. So it's still early days, and we have a long way to go, but we are very proud of the impact that we have been fortunate to create through the work our portfolio companies do.
Okay. Quono Capital Funds have made more than 65 investments since the firm's inception. If you could take me through Quona's investment thesis, what do you look for in companies and the founders? In fact, a large part of your emphasis is on companies that further invest in underserved markets like we discussed. Any area in particular that interests you, for instance, credit or MSMEs or companies supporting women entrepreneurs or in general supporting women?
Yes, absolutely. I think the answer is all of the above. Because we're very focused on this sector. We happen to be a fund which is very focused on inclusion and diversity. We do look at broad spectrum of founders, including women founders. More specifically, I think from a sectoral perspective, if we look forward in terms of what are the exciting areas for us in financial innovation, I think we believe that financial infrastructure and the role of fintech in helping develop the financial infrastructure over the next few years is going to be pretty significant. And in several of the verticals in banking, in credit, in wealth, in insurance, etc., I think we have been running on infrastructure which is probably a couple of decades old in several cases. And the way consumers and SMEs experience these things have significantly changed over the years. So we are very bullish on evolution of financial infrastructure. We are very bullish on other theme, which is verticalized or embedded finance. And what we believe is financial services are going to move from largely being transactional to being more contextual and more experiential. And we think we'll see significant evolution on that front.
All right. Thank you for taking us through the new trends. But Ganesh, I can't leave without getting your opinion on the global tech route and how it could impact the health of the India tech ecosystem. Your comments on this?
Yes, I think it's very topical. You're absolutely right. Something we cannot miss. There are always positives positives and challenges in every crisis, and this is the fourth crisis I'm experiencing. The good part is I think we have a lot more stability that's coming into the ecosystem and coming in rapidly, and it's very much needed compared to the frenzy we saw in the last few years. The challenging part is even good companies clearly are having to reflect and work hard to stay afloat, to ensure that in 2023 they consolidate their position to make 2024 a growth year. So definitely there are some clouds in the horizon. But for companies which are building for the long term, and for folks like us who really back companies for the longer term, I think this is the time to really consolidate and build.
Okay. All right, Ganesh, we've completely run out of time, but many thanks for joining us on Startup Street and wish you the very best with all your growth plans.
Thank you very much, Shruti. Really appreciate you having me on the show.
Meanwhile, job tech institute Masai School has announced their latest fundraise, where the company has raised $10 million in a Series B round led by Umidyar Network India, along with existing investors including India Quotient and United Ventures, with the addition of Ulterior Capital. Now, the round also saw participation from two of Indian sports stalwarts, the face of women's cricket Mithali Raj and legendary footballer Baichung Bhutia, as investors and partners. Now, CNBC-TV18's Ritu Singh caught up with Prateek Shukla, the CEO and co-founder of Masai School, along with Mithali Raj and Baichung Bhutia, to talk about the company's growth trajectory and Baichung Bhutia's take on what it'll take to get Indian football on the global map. Take a look.
And we're here because Masai has just announced two new sporting legends as its investors in the company. Tell us a bit about that. How did it come to be that two sporting legends are now putting in money in Masai? What are the plans on that front? How much have you raised? At what valuation, if you could fill us in?
We were very clear that we wanted to bring in two iconic personalities from the sports fraternity, and I think Baichung and Mithali are the best. I can't think of anyone else than them. They are legends and an inspiration for millions of people across the globe. So,
well, no doubt about that at all, Prateek. But Mithali, if I were to get it from you, why did you decide to invest in Masai?
Well, see, I've been an advocate of equal playing field for men and women, girls and boys. Leading India for so many years, I led India for so many years. I've come across many such athletes from different walks of life. So that's where I felt Masai is doing a great job in giving that equal playing field for them, and especially with the scholarship, you know, where I'm honored to be part of that. If in some way the scholarship helps such women who want to create an identity for themselves, I think it's great. And that is why I feel, you know, I wanted to be associated with Masai.
And Baichung, what about you? And is this one of the first investments that you've made in the education sector, or
in education sector, yes. In fact, you know, taking it forward, the concept of you know, Masai, I think with the education system, what we're doing it right now is, I think, fantastic. In fact, you know, the kids who are selected does not need to pay a fees, and I think Masai does train them and educate them and also get them a job. And that's where I think it benefits both the student and the company. But also, I think it's a great concept because it's a successful concept. We've seen that in football. I think a lot of European clubs do that concept, and it's a very successful concept in which I think Indian football can do that. You know, in Europe, you spot the talent, you train them, make it a big asset, make them a big asset, and they go on to play for their club. Obviously, the players get a good, huge contract, but at the same time, it becomes an asset for the club to sell him in a bigger, you know, in a bigger revenue. So I think it is a very good concept that definitely would help. I think education system with Masai's brought it. I hope Indian football, especially the club system, starts following that concept, catch them young, train them, and make them an asset, and hopefully sell them as well. And it benefits the club, the player, and the country.
Well, we sure hope to see that happen. But Prateek, tell us a bit about how you're going to be using this capital in the context of what is going on in the EdTech sector. I know you're slightly different from you know, the Baijus and Unacademies of the world, in that you're focusing on developing a skill set you know, for jobs. But given the funding winter that we're seeing, the mass layoffs in the sector, what are you doing to protect and grow your business? What is your moat?
This capital is going to be utilized not just in our existing programs, but we are also starting two another programs which is meant for different kind of audience. So it's an outcome-based education which is majorly targeting towards graduates as of now, but then we wanted to enter into the college where the students are there, just like what Baichung said, that we wanted to basically catch them early, wanted to work with them, and wanted to build those skill sets right when they are in college, so that they don't miss out on their prime 4 years when they are spending over there.
But what is going to be the path to profitability? And when we talk about expansion, you had a couple of acquisitions last year. Would you look at the inorganic route to grow now that you have some capital as well?
No, we won't. So fundamentally, as I said, that we believe in building a very, very strong foundation towards building a business. And one of the most important principles is that we don't believe in inorganic growth. We would be focusing only on organic growth, but it is so rapid that it is going to be a very, very fast moving spaceship going forward.
At Masai, you're not playing a T20, right? You're playing a longer term match. Tell us about your future plans. Any plans of going public over the longer term? If you could give us some targets that you're hoping to achieve before you take that step.
So we currently have close to 7,000 students studying with us across different learning tracks. We have been able to graduate and place over 2,000 students with an average package of 7.5 LPA, which is higher than most of the NITs and IITs right now. And we intend to basically focus on the organic growth from here onwards. The idea is that once we'll achieve the number, which is 25,000 students graduating and getting placed every year from Masai, that's the time when we'll take it to the IPO. And
so
that
what
number
is the timeline that you're looking at?
It's around 2.5 years from here onwards.
2 to 2.5 years. And you know, how much funds have you raised so far, and how is the company valued at the moment?
So we have raised roughly around $20 million so far across 4 different rounds, and that includes the existing one as well, which is a $10 million round. On the valuation side, I think I prefer to remain it undisclosed at the moment, but yes, we have grown from last fundraise to this one. It's a substantial jump.
With that, it's time for us to take a short break. But coming up, space tech startup Bellatrix Aerospace will invest $76 million to establish its R&D center in Bengaluru. We put the startup's co-founder in the hot seat to find out more. Stay tuned.
Welcome back. You're still with us on Startup Street. Now, Bengaluru-based space tech startup Bellatrix Aerospace recently announced that it would invest $76 million to establish an R&D center and manufacturing facility locally. Now, this new facility is expected to manufacture thrusters, including the Hall thruster, microwave plasma thruster, nano thrusters, and green propulsion systems. Now, founded in 2015, the startup specializes in space propulsion systems and rocket propulsion technology, making space technologies affordable and accessible for all. Joining us now to discuss this further is Yashas Karanam, the co-founder and director of the company. Yashas, thank you so much for joining us on the show today. Like I said, you're setting up an R&D facility for your space taxis and propulsion systems for rockets and satellites. Take me through how big this new facility will be and by when will it be functional?
Thank you for having me here. I think the new facility is going to be spanned across 5 acres of plot, which is about 230,000 square feet.
Right.
And I think a majority of this is going into state-of-the-art R&D centers. The goal for us is to kind of build a world-class facility right here in Bangalore. And we are almost there because I think all the experiments required to kind of set up something like this have already been done. And we have been incubated at Indian Institute of Science. And we have already worked with a lot of these kinds of equipments here. And we have set up our own lab here, which is already worth several $1 million. So I think with that experience, we are now planning to gear it up. One is towards R&D, but also more importantly, we are hitting commercialization next year. And once we go commercial, we require one of the best facilities across the space tech area to kind of service the rest of the globe, right? There is a lot of market coming in from across the world. So that is something that we are looking at with this facility.
All right. So once operational, now you expect the facility, I mean, you're putting in $76 million, so that's how much you expect the facility to be worth. So what will we see come out of this facility and how soon is this expected to turn revenue accretive for you guys?
Yeah, the revenue is going to start in just next year. I think the cycle is going to start, but I think for us to make that return on investment on that $76 million, it's going to take some time, but I think we are going to get there quickly. That is the goal. And coming out of the factory will be propulsion systems. As you mentioned, there are 4 different classes of propulsion systems that we work on. One of the unique things of Bellatrix is that we have capability to service any and every kind of satellite mission requirements, be it a small nano satellite, which is literally this small, the size of maybe your wallet. So if you have a satellite which is that small, a pico satellite, we would have a solution for that. Then going upwards, if you're looking at satellites which weigh probably several tons and probably the size of a room, we would still have an engine that would fit that. So we would be manufacturing all of these to the precision requirements of the space industry. And also for these kinds of facilities, one of the very important thing that space for something like us actually demands is that your product should work in space for at least 20 years of time. So it's very different from manufacturing something here because you have the option to go and service it. But in space, you don't have that option because once you're gone there, there is no serviceman who can do it. So you will have to build your systems to be highly robust. You will have to simulate the entire harsh space environments here on Earth. For example, you will have to create the same vacuum conditions that you are going to find in space. Right. And you will have to create the same thermal conditions. A lot of time when your satellite is facing the sun, you're exposed to plus 120 degrees. And when you're on the other side, you'll be facing about minus 100 degrees. Right? So you will have to simulate all those things here in your facility and qualify your systems accordingly.
Right. So you've told me.
And it's not just the satellite propulsion systems. We are also going to be working on almost all kinds of propulsion tech for ground to space and in space and deep space missions.
Right, absolutely.
But more importantly, we'll also be working on something called an orbital transfer vehicle. Yeah. For a common man, it can be compared to Uber pool in space, basically like a taxi which can take your satellites from one orbit to another orbit. And we are going to be setting up that here, setting up a facility here to actually manufacture and bulk produce some of these
Right,
global
Yashas.
clients.
But if you could quickly tell us what's the capacity at this facility going to be like? You've already told us what you're going to be manufacturing there. So what's the capacity going to be like, and how soon will we see you start manufacturing, especially in your phase 1?
I think we are going to start with over 1,000 thrusters a year and then kind of accelerate and take it upwards based on the growth and how the revenue kicks in. But I think we'll be able to easily take up more than 1,000 thrusters a year, which is actually quite a big number for the kind of industry we come in, because for propulsion systems, usually the lead time in the market is pretty large. So the goal of this facility is also to kind of cut that down and make it to few months, I would say.
All right. So also, your space vehicle is expected to launch to the lower orbit of the Earth in 2023. So as you explained, it's a taxi in space, will offer ride sharing for small satellites and drop each one of the passengers to their intended slots in space. So can you take us through where you are on this front? What's the update on this?
For our thrusters or propulsion systems for satellites, these are basically engines for satellites that help satellites move from one orbit in space to another orbit. Basically, for a satellite to go from one orbit to another, you need to build an engine which works in vacuum, which is very different from all the engines we have built here on Earth, because you have a medium or you have some sort of mechanism against which you kind of use the atmosphere or use friction and propel your things. For space, it is very different because you need to make something that works in vacuum. So these kinds of engines, we have a lot of expertise in making them hardened for all the space environments. So coming back to the question here, so we would be having these kinds of systems actually tested in space in an actual satellite next year. 2023, there will be multiple satellite launches where our thrusters are getting qualified. And for the space taxi, we would actually launch that in the year 2024. That's when it's getting space qualified.
So we'll see the space taxis in 2024. All right, Yashas, we're completely out of time, but thank you so much for joining us on the show today.
Thank you.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.